Hi all, this is Ashish Kyal here. Welcome to Elliott Wave News channel by Wave Strategy Advisors, and we meet again on Friday. This time the webinar is a different one, where in last webinar I said that we will be discussing about various questions that I have received from the viewers, and I'll be addressing those questions right now, just in a minute's time. And before I start doing that, I am sure many of you might be keen on knowing what's happening with Nifty. So I'll just spend a minute to explain the current scenario of Nifty. So prices are actually moving in a complex corrective fashion from the lows of 7,900. The detailed internal counts of these have been shown in our daily research report, which you can get access from the website. And currently markets are probably in the third standard correction, which is ongoing. And for the first time in yesterday's trade, we have seen some breach of the trend line, which was protected for many weeks now. So there is some nervousness creeping in as soon as market reaches around 9,000 level. And an important thing to observe is that this is after the strong global rally which we are seeing. US markets have been up by around huge percentage points since start of the year, and we are still struggling. We are going up, then going down, without any specific theme that is leading the market. So as I said before, we need a theme for the markets to develop into a bigger uptrend. Unless we lack that, there is going to be a range bound action, more of range bound action, and lack of momentum move. Also, since we are in the third standard correction as per Elliott wave and Neo wave, we are not seeing the momentum which is building up either on the upside or the downside for now. So apply Bollinger Bands that will provide the precise areas of reversal and crucial levels for Nifty. And probably on the downside, keep an eye on 8,800, and on the upside, keep an eye on 8990 levels. So these are the important levels over short term. More detailed outlook you can find in our daily research report, Financial Waves short term update, which you can find on our website wavesstrategy.com. So let me now quickly start with the various questions that I have received. I'm not able to, I will not be able to address all the questions given the overwhelming number of queries I have got, but I picked up a few from them and I'll be addressing those few queries. So let me quickly start with that. The first question that I have received is which is the best free technical analysis charting software for Indian markets? To address this, we are going to come up with a new website very soon, probably within a week or 2 weeks time. And on the website, we will be providing the charting software where you can chart end of day plots for any of the stocks or indices for Indian markets, as well as you will be able to plot and chart hourly charts or even a smaller time frame for the global markets and global stocks. So that is going to be launched soon enough, within a period of 2 weeks. So keep tuned, stay in touch with us, and we'll update you when the charting software is going to be live on our website. The next question is, which is the best trading technique to earn in Nifty and Bank Nifty? See, there is no specific one technique which will give you money. You need to adjust and accustom yourself based on the market dynamics. I don't want to use the jargon, so let me explain in a very simple term. When you are looking at a Nifty and the Nifty is moving in a very range bound action, then you need to use Bollinger Bands technique, which works brilliantly. When Nifty is probably about to reverse, you are not going to make money, because on the upside, the stocks that you buy is not giving you money. Even Nifty index reverses, so buying options during reversal times is not a good strategy. Secondly, after the reversal has happened, the confirmation is important, and Elliott wave is one such tool which will help you provide that confirmation that whether an important top is formed or the market still has more steam left on the upside. I would suggest use basic technical analysis methods combined with the forecasting tools like Elliott wave, time cycles, Neo wave, and that is going to give you the best strategy to form both on Nifty and Bank Nifty. If you do not have the time to learn those techniques, probably you can access the research that uses those techniques and provides a clear outlook on what is the trend, which waves we are into right now, what can be expected, the important support and resistance levels. So a lot of techniques. If you want to start building up, start with the basic technique like channels, which is very important. use pivot low or pivot high as a support and resistance, and look what the major index is doing. So the best part is you can learn about Elliott wave. In case you would like to know more about Elliott wave and learn more about it, get in touch with us, and we are conducting a training on 18th and 19th March, which will be using how the basic technical analysis can be combined with advanced technical analysis methods like Elliott wave, time cycles, Neo wave, and how can the best trading strategy can be adopted. So I'll not be able to give a very specific answer. Okay, this is the strategy that you should use. But trust me, it has to be a combination of channels, moving averages, RSI, time cycles, and Elliott wave, and that will derive and give you the key reversal areas, the key strategies of position sizing, when to enter, when to exit, and all of those things. Okay, I have another question of I have lost 2 lakh rupees in the process of recovery of my money. Please advise on the stocks. Uh, Please understand, when we are looking at the market, this is not about it should be treated like any other businesses. So if you are investing or trading in the market, you should be okay risking the capital that you are putting in. If you are not comfortable putting in that capital, then do not risk it. So again, and secondly, if you have lost some money, in order to recover, if you want to put money more, don't do that. Always remember, it's all about probability. There is a gambler's fallacy, which means that if you have lost for a series of streak for 5 to 6 times, you will assume that you are going to gain in the 7th time and it's going to reverse. It's not necessary, because each of these events are independent. The probabilities are all independent. So what I would suggest is risk a very small capital, learn how the market functions, learn about technical analysis methods, various different, read books, attend seminars, attend trainings, and then you will be able to understand how these various methods work, and then combine it, share across your charts with me, post it on our discussion forums. We will be discussing about it, why it's positive, why it's not positive, sharing the view. So it's all about probability. So if you have lost money in the past, you shouldn't be discouraged. You should start learning now and risking very small capital, and try to learn the methods, and then try to play around with probabilities. Okay, the next question is what are small x and big X waves? So small x and big X waves are different waves, different types of patterns that we see. So as per Neo wave, in case of a small X wave formations, they will be normally less than 61.8% of the prior standard correction. And whereas the large X wave will be more than 1.618 or 161.8% of the prior standard correction. Most of the times we see a small X wave formations in complex corrective, and that is also channelized. What we are seeing on Nifty from the lows of 7900 has been in small X complex corrective patterns. And if you draw channel on Nifty or refer our previous webinars, you will see it has been perfectly channelized. Each and every move has taken support towards the channel and resistance at the upper end of the channel. So those are small X waves, which has retraced nearly around 38.2% of the prior fall. So in case of a small X wave, it will not retrace more than 61.8%, whereas large X wave retraces more than 161.8% of the prior standard correction. Now this is a concept, advanced concept as per Neo wave technique, which is advanced Elliott wave. Then the next question that is there is there a trading opportunity in base metals? Absolutely. I mean, base metals are all over the places. If you look at copper, lead, zinc, aluminum, they have been in an up move over past few days, then suddenly they reversed, then in a down move. Trading commodity is not easy again, but you need to understand the short-term direction. There are opportunities on intraday basis which are there, but it's all about probability. There are times when it becomes challenging. There are times when the stops get triggered. But if you play with the probability well, if we are successful even 60% of the time, and 40% of the time it's not successful, still you will be able to make money if you maintain risk reward. And so there will be opportunities. In case you would like to get access to the commodity research report that we publish or the commodity calls that we provide, you can always get in touch with us through wavesstrategy.com. What is the next target of Nifty, and what happens in next 2 weeks? How can one play for Nifty? Sorry, I'll not be able to address very specific question with respect to Nifty. What is the target? or what is the exact level that one should look at. For the trading opportunities, I would suggest the best is to refer the research report. The reason I'm telling you, I'm not just promoting research from our end. The reason I tell you is, suppose if I give a level right now that Nifty is heading towards this level without justifying my stand on what basis I'm talking, and if Nifty doesn't move that way, then the next thought that will come in your mind will be it doesn't work. And that's why I don't want that you should be thinking it doesn't work. It works. It's all about probability. Given the technical evidences and given all the background, this is what we think should happen, and there is a possibility it might not happen. So refer the research, because very clear justifications is given what is expected over next few days, what is expected over next 2 weeks, what is expected over next 1 year on Nifty and Bank Nifty. As of now, in a nutshell, Nifty and Bank Nifty are moving in a range. Use range bound trading strategies like Bollinger Bands or other range bound methods, and buying near supports and selling near resistance is the ideal strategy. Forecasting an up move, whether it's going towards 9200 or 9300 or not crossing 9000, is little tricky right now, because markets are not heading anywhere even after the global movement, as I said during the starting of the session. So very challenging scenario. During such scenarios, instead of forecasting method, use what is working well. So find out support, find out resistance, and wait for that support or resistance to break for confirmation. Then the next question is, I'm still holding Nifty on the short side. I would say that you need to have a stop loss whenever you are either long or short. Unless and until you have a stop loss, please do not trade. So there is no clear indication of what level you have shorted, so I'll not be able to comment. But short-term trend, as I said, is on the sideways action. Bank Nifty level to watch on downside, as Bank Nifty is not able to cross 21,000. Very good observation. Bank Nifty has failed to take out the highs which was made few weeks back, even when Nifty moved. So that's a classical negative divergence between two indices. So keep an eye on Bank Nifty. If Bank Nifty starts capitulating, then that will be the leading sign that medium-term trend is about to reverse. I have a specific question with respect to SBI, PTC, and what should be done on those stocks. I would suggest probably on SBI you can use a very strict stop loss. Do that. Keep a stop whenever you are entering the position, and even for PTC, do that. I'll not be able to give you the exact levels because I don't have charts in front of me right now. But drop me a mail and we will get in touch with you with the crucial levels of those things. The another questions are from debt fund related perspective. It's interesting to see a lot of questions even on the debt side of the mutual fund, which I thought is probably not picking up in the retail segment, but there have been a few questions. See, debt funds are a very good funds in case there are uncertainties in different asset classes. So I would suggest if you are holding debt fund, then keep holding it, depending on whether you are holding a long gilt where the bonds are expiring in 20 years, then that's not the good place to hold on. But if you are having a small debt funds which are expiring in 3 months, 6 months horizon, those are the good ones to hold, because there is very high likelihood I'm expecting a rate cut happening over near future in next 1 or 2 quarters, and that might help the short-term debt funds, not so much the long-term gilt funds. Because in case there is a rate hike in US which happens, then there is a possibility of money flowing out of India back into US, which will result into long-term gilt funds coming down. So the best strategy is to probably move out of long-term funds in debt and put into short-term debt funds. Which debt funds would you recommend? See, we also provide a mutual fund distribution under the umbrella of Waves MF Advisors. And for debt funds, that I would recommend is depending again on what time horizon you have, what risk appetite you have. So to answer these questions, I require few more information. Please send across your information to helpdesk@wavesstrategy.com, and we will pick it up from there and we'll advise you on which debt funds are good, where you can invest. Even we have an online execution of mutual funds through Waves MF Advisors, where we will set you up for online executions and we will be monitoring your investments very closely, so that those when to shift from equity to debt, and then from debt to long term to short term debt, all those things are managed online easily. So write down with clear details on which debt funds you are holding, so that we will be able to advise in a much more prudent way. And medium term debt funds, again, you have mentioned, the question is, I have investments in medium term debt funds. NAV of the funds have come down from 0.85 to 0.49%. I'll not be able to advise which medium term debt fund you are holding, whether it's Birla, whether it's Axis or ICSA. So unless I have that complete this information, I'll not be able to give a very prudent advice. But nevertheless, I think medium term debt funds can still be hold on for a few months, since I'm expecting a rate cut that might happen in near future. So that might start outperforming. Do not just move out of a fund because it has given you negative return for a quarter or so. Give it some time, hold on to your positions. And then the last question I have is, should I redeem the equity mutual funds that I have exposure to, or stocks? Do not redeem unless you want money for very short term horizon. So if you are able to hold on to equity for around 2 years or 3 years, I think this, even if we have a correction, it's going to be the final correction that we are going to see before a very strong rally starts. So the overall secular bull trend is going to be remaining intact for next few years at least. So any corrections from here is going to provide a buying opportunity. I think we are going to see some short-term volatility given the elections, UP elections outcome. So that short-term volatility you have to live with if your time horizon is 3 years. So if your horizon is 3 years and you want to trade for 3 months, do not do that. That can be disastrous. If horizon is 3 years, then hold for in for 3 years unless fundamentally something has changed. And if those things are changing, the question will be, how do you know that the things are changing? Keep in touch with us. We will keep you, we will advise you. If some things are changing, we'll send across newsletters. If markets looking dicey from long-term perspective, but I think over long term, we continue to be bullish from very long-term perspective, 4 to 5 years. Over short to medium term, yes, some nervousness can be there, but it's better not to play out or sell across your holdings just because of short to medium term corrections. Hold on for the long term if your horizon is 4 to 5 years. And for a very detailed outlook on short term to long term, I think you can also get access to our monthly research report, Financial Waves long term update, and that will provide a very clear perspective on what's happening around the global markets, Indian markets, currency, as well as commodities. So I'll be able to take on only these many questions for now. Keep writing to us. In case we again receive a lot of questions, I'll be addressing it again. And stay tuned. In case you would like to attend a training on 18th and 19th March here in Mumbai, which is the most advanced technical analysis training on Elliott wave, Neo wave, time cycles, I'll be covering some aspects about Gann square of 9, not very detailed, but some aspects that we can pick it up from there. So please feel free to register. There are only few seats now. So the sooner you register, the better it is. And for more details, you can visit the website wavesstrategy.com or contact us directly on 99204 22202. That's it from my end, and I hope I've addressed the query to the extent possible. And keep writing to us. Thank you very much, and have a blissful weekend. Stay tuned.